All right, stock market analysis and projections. First, some important information. Do read this slide. It talks about our approach to the markets and about you using our information and how you do that. This is always important for you to read. One more thing before I get into the stock market analysis. I want to remind you that we share our stock market analysis. That's the S&P 500 analysis every day. You can get it in your email. If you are not an askSlim member, this is the way to start. Go to the front page and you'll see it says get free daily S&P analysis. Just put in your name and email address. There's no credit card. There's nothing. And we never share this information. Nobody's ever going to have your email address because we keep that locked up tight. And this is just a way that you can get our information daily. A great way to start with us. And one more thing. This is the askSlim Day Trader dashboard. This is a look at it at the end of Wednesday day, of course, which was a big down day. I want you to notice in here that this is just a wealth of information. There are three things in here that we provide that are amazing. This is the impulse monitor, which tells you the present energetic impulse in the market in the four different indexes that we look at. This is the SI intraday chart grid, which Matt does every single day. It's fantastic information, support, resistance areas, acceleration zones, when it's likely to move down or when it's likely to move up through a particular area. Look how it got perfectly through the acceleration zone here. And when the reversal came, this reversal scout turned down. And this is one of my favorite strategies, the 8-minute strategy. And this puts you in this trade on the short side very, very early. There was probably 60 points in this downside trade right over here in the S&P 500. This is just unbelievable. And I did a training on this. It's training number 5 for our members. You become a day trader member and you'll be able to watch that training. And we have a version of it up on YouTube that you can watch to see how to use all of this. This puts you on the right side, prevents you from being on the wrong side and raising your batting average, your wins and losses. So if you're a day trader, I mean, this is it's so great for you to have this. And as a reference to the market energies and my favorite strategy, one of my favorite strategies. So go to askSlim.com to the day trader on the product page. You can click on the information there or write Matt at askSlim.com. And he will tell you about the askSlim Day Trader dashboard and how you can get that. That's really important to share with you. If you are a day trader, you're going to love this. All right, stock market analysis. We're going to take a look at the level 4 chart grids. And I'm going to move that in right over here for you to see and blow this out so you can see. Our level 4 members get this every day. It looks like a mess, doesn't it? Those are our level 4 chart grids. And this is the way that they receive it. But if I blow this up, each one of those, it becomes all of our work and all of our analysis. So, and we update this regularly all of the time. This is the weekly on the S&P 500. The proprietary indicators that are in here are basically the reversal scout and our cycle analysis. You can see in here the cycles are pretty good. These blue vertical lines are showing you where the cycles actually bottomed. And this is where the ideal bottom was. Here, this one bottomed a little later, this one bottomed a little early, and then this one gets a bottom that's a little bit later. This is where we were looking for that October low. It was down 10.9%. We talked about the cycle trough coming late October. It actually came in the week of October 23rd. Then we had the reversal scout turn upward, and it has been in powerful upside momentum ever since. My target for the year in what I thought was going to be a bull market year was way, way down over here. So it was not anything like what I had expected at the beginning of the year, except that we thought it would be a bull market year. But our indicators keep us on the right side and keep telling us that we have to look at what the market's telling us, not what we anticipate. You know, that's what's really so important, is that look at the market, listen to the language of the market, and make your decisions based on what it's telling you. You'll stay out of trouble more often than not when you do that. So here's where we are right now. There is likely a minor cycle correction coming right over here. And I think this is important to look at this because this points out to the second to fourth week of January, maybe the first week of February out here, where there's likely a pullback. We have moved up here into this fib extension area. Here's your all-time high, 48,1862. You can see we're just below that, where the Dow and the NASDAQ did make another all-time high. So we have what is considered very bullish conditions in here. This correction over here, which would be this mid-cycle low right over here, you can see what happened here. It came down, a couple hundred points, and then it blasted up to another high here. This was only like 140 points to the downside in that minor cycle, and then blasted back up to a high. That's really what I expect will happen in here, is that you will get this minor cycle low right here. It will blast up to another high. If it doesn't take out the all-time high first, it's very likely to do it here. That upside projection is 4,900 right there, which would come sometime early part of the year that we're looking at. You can see this upward channel in there. It's pretty nice and likely to get you into this higher areas of the fib target zone right there. Here's your yellow period of risk. This period out over here in March, April, and potentially into May could be a very serious downside correction. It would be, if you look at the alignments right over here, you can see this one was enormous in a bearish market. This was still 4,200 down to 3,800, 400 points in the S&P. This one over here moved down from 4,600 to 4,100, 500 points in the S&P. Of course, you're getting from higher levels. I would expect wherever we get to the peak in here, the decline will be at least 500 points out into that May period. So that's a little bigger picture than I wanted to look at right now, but still, I think because I have that yellow highlighted area there as a period of risk, that we have to be looking at that. When I look at the monthly and the big picture analysis, we'll be looking at this again. So when I switch over now, remember I'm advancing on this right now on these charts. You can see in here that it gets up into this resistance zone between that weekly fib extension right over there, a daily fib extension here, and the all-time high, and the next fib extension right there. This is really a thick area of resistance and looking for a corrective period. You could see where these minor cycles and dominant cycles come down together. You get declines. You had a sharp decline here. You had a pretty sharp decline here, right there, because they came down together at the same time. That's where we are right over here. I was looking for at least 140-point decline here from whatever this peak is out into this support. This top of this support from the weekly chart is around 300 points down, 250 points down right there, but it might hit this dominant support right there at 46. That would be 46.17. That still could be as much as 150 to 200 points on the downside here. This is where we're going to start looking for the top, a minor top to be formed, and then come down. You see that big down day on Wednesday? That's showing you that it's capable of some air pockets right now, and that might be a sign. You can see when the market peaked right over here. Let me just get my pointer. See that big down day right over there, and then it came back up. I mean, that's an indication that you're starting to get some selling coming in here. You could see the same thing happened here, and that's what happened right over here. So we're in an area here that we could get a peak. Remember, we are in the holiday season. It's going to be slower. Very funky things happen when you get into Christmas, New Year's, and into the first week or couple of weeks of the year as money really starts flopping around. And so you could get some pretty good sized moves. I'm going to call for a decline out over here into sometime second to third week of January, then setting up the next upside period here, we could go to 4,900. So certainly not a bearish call I'm making in here, just for a pullback, 150, 200 and something points, and then up again. Note on the bottom here, this is the option bias indicator giving a top warning right over there as it got very, very overbought. It is now turned, getting a couple of neutral readings right there, but that warning often does bring you a peak. Now we're going to start to move ahead faster. Here is your daily, your look at your daily momentum conditions. This is the slim ribbon and the slim ribbon PO and the area chart. This tells you still very bullish conditions right over here. This is your 2-hour chart where we're looking at the askSlim market condition indicator on the bottom. It tells you when you're in here in the above, really above 80, that this is very, very powerful market. You could see the slim ribbon PO. Look right over here, this signal where it said momentum's going to resume on the upside. Wham, really moved up right over there. It went neutral right over here for a couple days, and now it's turned positive again. So key here to watch and see whether or not this turns neutral or red. On the 2-hour chart, that will give you an indication and a heads up that we are getting into that correction. Here is the NASDAQ. Looks a lot like the S&P 500, except it went to an all-time high. This pullback over here, very likely to get into this 15,800 area if we are in this peak as expected. It can go all the way up into the 18,000s potentially. This is 17.4. This is 18.3, 18,300. And maybe what happens is that this gets over here. I'm just going to duplicate that. And out after this correction out into April is where it does that. And then this is the period that's strong out into the summer. So again, this is a big corrective period out over here in April, March, April, May, and then potentially the moving up to what might be a bull market peak. I don't want to give away so much. As we look into the big picture analysis coming up at the end of the year. So we're going to look for a pullback into January. You can see how that lines up right over here. These are fib extensions from the first minor cycle. You got this big decline Wednesday trying to come up again, but I think it's going to run into trouble. Here's your top warnings right over here on the option bias indicator. So if you were trading the option in the index options and you were trying to be short the market, this was telling you don't be. This is telling you that there is a very powerful period in the market. This now tells you that it is way overextended, and I'll show you another chart on that in a few moments. When we look at some other ways to see if a market is overbought or oversold. Here's your NASDAQ powerful momentum conditions. You could see giving you this upward arrow right there saying it's not done. Maybe between Christmas and New Year's, we get a little more on the upside. Here's your 2-hour chart. Look at that 2-hour slim ribbon PO. Just screaming at you that says a momentum resuming upside, resuming upside, resuming upside, and the askSlim market condition indicator trading right now at 93. This is just towers of strength that we're looking at here. This is, remember, on the 2-hour chart and gives you this information for those people that are swing traders. I mean, this would be used if you're using swing trades over, a few week period, couple week period, or if you're a shorter term trader, this would be for your directional decisions when you look at this, or your sizing, because that's what you would do, only go maybe as far out as a 2-hour chart if you were a much shorter term trader. That's your NASDAQ. Here is your Russell moving up towards the major 50%. That is only halfway back from the whole bear market. So it has been a lot weaker. Again, this cycle says comes down over here, in this case, out into late February, early March, looking at this, and then likely up again with potential to move up here to these areas of this fib extension at 2132 to 2143. That's where we really ultimately would target this upper track right there. If it really stalls here and comes down a lot harder, then the area it's in now is going to be bigger resistance. Here is your daily chart. It looks a lot like what we've been looking at. Shorter cycles over here, looking like it's going to pull back here into the first to second week of January, then turn up again. And then this next cycle over here points to, and I can highlight that, towards the end of January. So that might be a choppy period over here for the Russell as it starts to make a bit of a corrective period. Look right over here, these warnings right over there. Now, if you wanted to be a bear, this was telling you all the way here. This is August through November. This was really giving you negative indications. See the bottom warning here where you got those 3 orange dots? Just amazing. It bullseyed that right over there. Here's your top warning going on right over here. Sometimes these extend out, especially in the holiday season. You would expect that, but then we think the market is going to get into some corrective period in here. So that's a look at the Russell. Here's your Russell on the daily momentum. Slim Ribbon PO gave you that signal right there. Momentum is likely to get back to the upside. You could see gorgeous. Look at these negative signals right over here. Slim Ribbon PO telling you momentum to move to the downside. Slim Ribbon is often a resistance or support. You could see it getting the resistance right over here. You could see it getting the support here. By the way, Slim Ribbon, that Slim Ribbon by itself is a free indicator. Write to Matt if you want to know about how to get that. So free indicator, the Slim Ribbon PO, and the market condition monitor. Those are proprietary indicators only available to level 4, as is the market condition indicator, which you see right there. Look at that 95 reading on the bottom on the Russell. Look at the Slim Ribbon here on the 2-hour, positive all the way there. And every one of those momentum signals right over there, just absolutely fantastic, telling you momentum was very likely to go back to the upside. Just a great look there as you see the Russell. So that is a look at the stock market. You can see that what that's looking at is conditions that have been super positive. Our indicators have been super positive. The resumption signal's been spot on. And the cycle analysis structures have been positive. So regardless of, even if I say the market is vastly overbought, that it is incredibly overpriced, it doesn't matter because we are agnostic analysts. And we're going to look at this in a way that we're listening to the language of the charts, the messages from the market. We preach that. We do that. Everybody on our team does that. And whether we have bias or not, it doesn't matter. My number one bias is looking at what the charts are telling us. And I think that is what is ultimately important. So let's look a little more at what charts are telling us as we look at overbought and oversold conditions. These are 2 very important charts that we're going to look at because we're looking for a correction, just a correction in the bear market of, in the bull market of like maybe 3-4%, maybe 5%. That's very small. Take a look here at this chart. This is the S&P 500 overbought or oversold conditions. Looking at this from going back about a year and a half. It's a 2-hour chart that this is in. So the reason that's important to say it's a 2-hour chart is because the standard deviations have a look back period of 2 years. That's what we're looking at right now. So the middle one there is your linear regression line. It takes 2 years worth of data and takes the best fit for that 2 years worth of data and builds it. Then what we do is we put in a 1 standard deviation line and 2 standard deviation lines, whether it be to the upside or to the downside. Now, on the bottom, I put in the disparity index, which essentially is showing me the percentage away from the 13-week moving average, which is really important. So remember, this is a weekly disparity, overbought, oversold conditions, looking at standard deviations. Look what happened over here, where it got down to about 8% below the 13-week moving average, got into this area where it was extremely oversold, and then you had this upward turn. You see where the disparity index began to turn up. That's where it gave you that signal right there. Lost my pointer. Let me just see if I can get it back. Okay, so here you could see where it got overbought. This is approximately 4 to 4.5% above the 13-week moving average. And look over here. So these only got up to the linear regression line and then turned down. So it's about getting up to that amount over the 13-week moving average. And then you got these corrections in here that you can see. This was, still sizable declines or pullbacks in there on those weekly charts. But look what happened right over here when you got up over one standard deviation and it held up here for a little bit. There were 3 downward signals right there. It took a few weeks for this to turn down, but it got up to about 1.3 standard deviations right there. Look where we got up here, about 1.7 standard deviations right there, getting up to the highest level distance between the price and the 13-week moving average. That is really giving you a sign that the S&P 500 is about as extended as we've seen in a couple of years. 1.7 standard deviations, getting up about to 4.6% above that 13-week moving average. Does it get any clearer than this? I mean, on top of the cyclical patterns pointing for a decline, a pullback into sometime mid to late January. This shows you, along with the option bias indicator, the conditions are not really great for the market to continue to go up right now. They're much more in shape for the market to have a pullback. So that's a look. Now let's take a look at the Russell. Why is this different? The Russell 2000 is overbought. It's now at 8% above that weekly moving average. I didn't put those arrows in there, but you don't really need to see it. Why are these standard deviations ticking down? Because using all of the information over 2 years weekly charts, all of the data is equivalent to a decline. So even though the S&P 500 is moving up, the sum of all of the data on this chart is still moving down, and you can see that as you look at here the linear regression, which is that 0 line in the middle, still moving down. Look what happened here when it got up to 8% overbought. The market had the bull pullback. 8% overbought, a big pullback. 8% here above, remember, that moving average, getting up to 2 standard deviations. You've got to really say, the Russell has been bought like crazy, but there is certainly an indication here that there is a reason to believe that there's going to be a pullback. Don't hear me saying the end of a bull market. I'm not. I'm saying there's actually a buying opportunity coming, and the market is very likely to have a pullback into January. And I love this analysis. Remember, this is askSlim charts. Level 4 members, if you're interested in this chart, write to me and I'll send it to you. Level 4 members only can get these charts. So that's it. Look at the overbought conditions, multiple time frame analysis and projections in the S&P 500, NASDAQ, and the Russell on our Level 4 member live chart grids, plus very unique look at overbought, oversold conditions.